Welcome to Accounting in Focus. Well, we've almost come to the end of Joel's landscaping problem, and I've updated the adjusted trial balance to reflect what we did in the adjusting entries. If you have any questions about those, make sure that you go back and watch that video. So now what I want to do, and I thought that I put this in Excel to make it a little bit easier, we're going to do the statements. Okay, so the income statement, the statement of retained earnings, and the balance sheet. So let's start off with the income statement. You have to do the income statement first, and the purpose of the income statement is to show what our net income is. Net income is revenue minus expenses. So I'm going to put in my revenue, and my revenue is $9,800. So I'm actually just going to link to that. Okay. Now I'm going to list my expenses. And so rather than type them all in, I'm just going to copy them from Excel. So I'm going to list my job expenses, my rent expense, my office supplies expense, my depreciation for computer equipment and landscaping, and mileage. Okay, so it looks like I'm going to have to make this a little bit wider. Okay, to make sure we get that all in there. Make those smaller. Okay, great. So now I'm putting in the numbers. So my job expense is $1,400. I'm going to drag this down. Okay, so I've got job expense, rent expense, office supplies, depreciation for the computers, depreciation for landscaping, and mileage. So my total expenses let's do an auto sum here. Okay, so if I add up all my expenses, I get $4,075. So now my net income is revenue minus expenses. I'm going to do revenue minus expenses. So my net income is $5,725. So that's how much profit we made for, it's not really the year ended, it's actually the month ended, because this company just started right in December. So I'm going to change my headings. Okay, so that way the reader knows that, we've only been in business for a month. Because think about it, you're like, wow, $5,700 isn't bad for a month, but if that were for the whole year, not as impressive. Okay, so next we're going to do our statement of retained earnings. This is the second statement we do because we have to do our our income statement first. So retained earnings as of December 1, 2012. Okay, now if we look at our trial balance, there's no retained earnings on here. Why? Because this is a brand new company, right? We started this problem with Joe starting his landscaping business. So my beginning retained earnings is 0. Now we're going to add our net income. And our net income was $5,725. We're going to subtract our dividends. And how much were our dividends? Our dividends were $1,000. So my ending retained earnings are going to be my beginning balance plus my net income minus my dividends. Since my dividends are negative, I have to add them. Okay, so my retained earnings ending balance is $4,725. Okay, and that kind of makes sense because profit minus my dividends. Okay, now let's work on our balance sheet. What goes on the balance sheet? Assets, liabilities, and equity. So I'm going to start with my assets. And I'm going to list all my assets. So I'm going to start Might as well just link this so I don't have to type them all in. Start with cash. And I've got accounts receivable, office supplies, landscaping supplies, computer equipment, accumulated depreciation for the computer equipment, my landscaping equipment, and my computer, or my accumulated depreciation for my landscaping equipment. So let me put in the numbers. Okay, now my accumulated depreciation, remember that is actually a credit. So I'm going to put that in as a negative number. I'm going to put in my landscaping equipment. And again, I'm going to put in my accumulated depreciation for landscaping equipment as a negative number. Okay, they offset the amount in my other account. So my total assets are $46,800. Next, my liabilities and equity. And for liabilities, let's see, I've got accounts payable, unearned revenue, and notes payable. My accounts payable balance, $75. My unearned revenue is 0, and my notes payable $17,000. So my total liabilities would be $17,075. And then my equity, what do I have for equity? Well, I've got common stock, okay. Let's total that up. And remember, my total liabilities and my total equity have to equal my total assets. So I'm going to take total liabilities plus total equity. That's not right. I'm missing something. What I'm missing is my retained earnings. Now, there's no balance on the trial balance, but I do have a balance. Notice it says retained earnings December 31, 2012. This is the balance I have to put in there. Okay, so now I'm showing all my equity, and now my total liabilities and total equity match my total assets, which is the whole point of the balance sheet, is to make it balance, right? So when you're doing your statements, you have to do the income statement first, your net income. Let's see here. My net income has to go on my statement of retained earnings. Oh, there we go. Okay. Net income transfers to my statement of retained earnings right here. And then my retained earnings transfers to my balance sheet. Okay, so that's why you have to do them in that order, because the numbers transfer from one statement to another.